Nike just reported they are going down 3% right now, almost 4% right now. It was up to start. They beat on earnings per share, 99 cents per share versus expected of 84, but they missed on revenue. $12.6 billion versus $12.86 billion in revenue. They're down over 4%, almost 5% now. Guys, I own Nike. Don't buy a company just because somebody has out there. I have a small position, and I'm so excited the stock is down. I hope it goes to $40 per share. If you're new to the channel and you're like, what is this crazy guy saying? You gotta listen to our videos, subscribe. I'm going to change the way in which you view investing. You want things to go down. This is exciting. It's down to $89, $88 per share. Now Phil Knight will come out and say AI, and all of a sudden the stock will be at $187 a share. What do you think, Mo?
Yeah, that sounds accurate.
All-time high, $179 per share back in November of 2021. It is down now it's down 50% from its all-time high. Just proof, guys. That doesn't matter what company it is. Eventually, there'll be bull and bear markets for every company, basically, unless the company's absolutely going to crap like all the companies we warned you about, like Workhorse, Tattooed Chef, anything Kathy Wood touches. So, subscribe to this channel because we do 4 or 5 videos a week where we talk about earnings releases, etc. So, Mo, you've got the earnings release up. How many times did they mention AI in the earnings release? I'm just kidding. Please go ahead and talk about what's going on in the earnings release.
They have an AI shoe coming out.
Yeah.
Just kidding.
They probably do. You're right.
So they put in here full year revenues increased $51.4 billion, up 1%.
So it didn't increase 51.4 billion. It was at 51.4, up 1%.
Mm-hmm.
That's not very good.
Wholesale revenues for Q4 were up 5% on a reported basis and 8% on a currency neutral basis.
Okay.
Gross margins increased by 110 basis points to 44.7. So that's good.
Wow, that's pretty good. For the quarter?
Before? Yeah.
44.3 for the year.
Okay.
For the last 12 months, they were doing 44.3 to be 44.7. Guys,
that's for the quarter, yep.
All the more reason why to be impressed with NVIDIA, because NVIDIA's gross margins increased by 15%, which is 1,500 basis points. That's insane. It's so hard to move 1%, 100 basis points, even on gross margin. Go ahead, Mo.
They returned $6.4 billion to shareholders in the form of dividends and share repurchases.
Poop.
Yep.
$2 billion of that was dividends, as we see right here. Guys, here's a cool thing, Mo. Oh, well, overall, 5-year free cash flow is pretty similar to the average net income, but last year's free cash flow is $6.2 billion. Guys, remember, share repurchases aren't always a good thing. Don't get too excited just because you hear share repurchases. It's not good to buy back expensive shares, right? It's bad. What else you got, Mo?
So Nike Direct revenues for the quarter fell by 8%.
Really?
Yeah. Wasn't that what they were trying to do more of? Because remember they were trying to pull out of those stores and go.
Yeah, that's interesting. Nike Direct down 8%.
And now this is an interesting one because I've just seen a lot of people wearing Converse shoes. Revenues from Converse dropped 18% in the quarter.
Really?
Big drop.
So Nike's dead.
Yeah, I think so.
R.I.P. Nike. They fire Tiger, and this is what happens.
Exactly.
Tiger creates that stupid logo.
Or Tiger just knew.
That Tiger creates that stupid
That
logo.
is the dumbest logo.
What? I thought you said you liked it.
No, it's awful.
Oh, good. I hate that logo, and I haven't seen a single person wearing it.
And it's so expensive.
Is it?
Yeah.
Oh, boy. Oh, boy. So, guys, Nike is a great company. If I asked you to name the best shoe, if I asked 100 people, Family Feud style, name the best shoe company out there, how many are going to say Nike?
The majority, I think.
I would think the majority.
I mean, if you asked 100, it would probably be the majority.
I would say the majority. I think they're a great brand. I think their whole going direct is a great way to increase that gross margin. You don't have to sell at wholesale prices to places. But at the same time, everything goes in ebbs and flows. People are going to start liking a brand, disliking a brand, liking a brand, disliking a brand. Let's see their financials. Let's go year over year. Going back 10 years, guys. 27.8, 30.6, 32.4, 34.4, 36, 39, 37, 44.5, 47, 51, 51.5. Very consistent growth. Couple flat lines here or there. But guys, I think Nike's brand is going to continue to grow. And I think this is a company that's going to be around for a long time. In fact, I ask you a question. What would the world look like for Nike to go away in the next 10 years or 20 years?
It would be pretty bad.
What would have to happen?
I mean, for Nike to go away. Yeah, that'd be bad.
Now, this is a basic question I ask about a lot of companies because my personal investing goal is to try to buy as many companies that I think have staying power because I don't want to sit there and wait and are they going out of business? Are they not? Nike, I doubt, is going out of business. Now, let's go check out the 8 pillars. Let's go see what the story of the 8 pillars is telling us. 2 X's, they immediately stand out. Our valuation metrics, 5-year PE, 5-year price of free cash flow. And remember, if you have our software, you can customize your pillars up to 12 different pillars. So they bought back about 4% of their shares. They have a high return on invested capital, 18.6%. That's very solid. They've increased their revenue by $10 billion, but it's only led to net income of $900 million growth, but cash flow growth of $2.8 billion. That's big money right there. That's big time money right there. And of course, their debt, 3 times free cash flow. They're fine. They can easily afford this. High return on invested capital here. Now, Mo, anything else jumping out at you on this earnings release?
I'm looking through some other stuff. Nothing's really popping right now.
So let's see what the analysts are saying. Because look at this, Mo. They're estimating $3.78 per share this year, growing to $6.36 over the next 4 or 5 years. That's basically double-digit growth almost every single year. That's big-time earnings per share growth. Now, again, it's easy for companies to buy back shares and really drive up that earnings per share, but you want to make sure they're buying back cheap shares like NVR does, like AutoZone does. Revenue growth? 1.5, 1.5, 6, 6.5, 5.5, 6.5. Not much. Man, what?
They really love repurchasing shares.
Well, they've only bought 4% back in the last 5 years, which isn't a ton.
They have an $18 billion program in place. That was put through in June of 2022, but they have a lot of shares to go.
Yeah, guys, that does bother me that companies would do that. I know that sounds counterintuitive, but it really is true how I feel about that. So, some fun tidbits on Nike. Sales of biggest athletic apparel, accessories, and footwear companies worldwide in 2023. Nike, number 1, $51.5 billion. Adidas, number 2 at 23. Puma, Lululemon. Lululemon's almost double the size. 70% bigger than Under Armour. That's incredible. Wow. Fila's still around?
Yeah, I didn't know that.
For Rizzle? That's interesting. And here is the revenue from footwear from Nike, Adidas, and Puma going to 2022. Okay, now I think Puma I know has gotten very aggressive in the basketball front. They're trying to really enter the basketball business. But look at Adidas here. It's down since 2017. And Nike keeps its trucking up. Keeps on trucking up. And they signed LeBron a few years ago to that lifetime contract, which I love.
Wow.
Now, number of stores. They were flat for a while here. And they're on the uptick again. Sorry, not number of stores. Number of employees. I'm going to do stores next. Yeah, 83,000 stores would have been epic. But look at this growth from 2009. 2.5 times growth on the number of stores. A little bit more than that.
Employees,
sorry.
You okay?
I'm not okay. Here are the retailers. Even Nike is depleting their retail stores. I actually personally believe, they just opened one in Pinecrest.
Yeah. I don't like those stores. There's never anything in those types of stores that I like.
Well, I ordered online and was able to pick up from Nike the store in like 2 hours.
Oh, okay. That's
cool. It was very simple.
Well, that's
cool. It was very easy. But I look at Nike going like,
why
okay, it makes sense. Yeah, just,
the app is so good.
The app is really good. And you're on that sneakers app too.
Yeah.
And do you still bid on stuff?
I haven't in a while, but yeah.
Yeah, I was wondering about that. Now, guys, we don't do this very often on this channel, but I'm going to do the stock analyzer tool on Nike. It's down almost 6% right now. And remember, guys, this does not include the balance sheet. So let's see what's going on with Nike. The last time I made assumptions, I did a 10-year analysis. Mo, what do you think of my assumptions? I did 3, 5, and 7% revenue growth.
I like that.
Okay. I can understand if somebody did 3, 4, and 5, to be honest. But profit margin, I did 10, 11, 12. I went a little bit higher because of them selling more direct.
Yep.
So hopefully they're able to get a higher margin.
Sure, that'll get going.
PE, it's a premium company.
I would pay premium for it.
2023 and 26. I do believe Nike deserves it for many reasons. Reasonable balance sheet, great brand. Lots of apparel brands have tried to take them over, can't do it. And again, 9% desired return. Again, this has no margin of safety in here, folks. So if you have the software, you put your own margin of safety and your own assumptions in. The key is margin of safety because future's unknown and we're humans and we make mistakes. So make sure you have your margin of safety in there. I hit the analyze button. And by the way, guys, Really quick, if you're interested in the software along with the community, with all these tools, we're changing the thing up a lot. There's going to, because we're trying to appeal more to our users, we're going to be changing where you can't get all these tools at once. But if you go sign up now, you get all the tools at once forever. You don't have to, you won't lose any of these tools. They're forever in your hands. So go to the link in the description below. I hit the analyze button. Low price of 60, high price of 120, middle price of 87. I have my watch list at 85 to sell puts at lower prices. Thank you very much for your time.